I'm announcing right now that our askSlim Premium Services free preview is starting in a week. All right, so now what we're going to do in this Market Week election special is look at the stock market for our 1 to 3 month outlook. You're going to find this pretty fascinating. I'll tell you right now is that I'm following you through, as I said in the beginning of the show, with what I think is a negative view. And the stock market is essentially telling me that. I don't just tell you what's in my gut. We look at all of the technical indicators and all of the patterns that we look at, come up with some of the evidence. Recently, I have been discussing the breakdown of mega caps and the signals that they were telling us that the NASDAQ was going to turn weak, that the overall weight of those was going to affect the market in a negative way. And we saw earnings reports coming out and Apple moving down almost 6% on what, bottom line you could have said was good, but they're really having trouble selling iPhones in this environment, and their China sales were really weak, and the stock market is reacting to these mega cap weakness. And I was saying that if you get a rotation, the rotation into these really lower price stocks is not going to compensate for the declines that we saw coming in the mega caps. And we're really seeing that. So, of course, we have a lot of issues now that are coming in and around the election and COVID-19. And all of that I'm going to take into consideration as we look at this. So I'm going to switch over. I had the bond market up, but now I'm going to look at the SPY. Often at this point, I look at the SPX, but I wanted to switch over to the SPY because it's got some different analysis in here. First thing that I want you to see is we're looking back here from 2015 out to 2020. And you can see we had a great rally, and the cycle analysis is on here. And what I have in here I call the great megaphone right there is what got formed in here. And the market rallied to the top of that megaphone. Well, let's take a little closer look in here. And again, we're looking at cyclical analysis. So the cycles that you see in here, these are essentially the counts on the week. Sorry, that one is wrong. That one is 18 to the peak, and that's 24 to the low. 22 to the low. This is 16 to the peak, 18 to the low, 19 to the peak, and 24 to the low. And this one right over here, very, very long, which we haven't seen in years, 24 to the peak, and then a break here to 27 weeks on the low. This was a 35% drop right over here. This was a 10% drop right over here. And now something is happening in here. Something is happening here that is quite negative as we look at this. This is the S&P 500 weekly cycle analysis. And what we're looking at right now is a breakdown. Well, we'll call it a breakdown of the head and shoulders top. We'll call it a not quite a breakdown yet in the market as far as the important cyclical numbers go. So the first thing we're going to look at in here are the cycle patterns. And that is, you can see in here is what we call the minor cycle. And here's another minor cycle. This is how it looks when you look up over here. This is the dominant cycle right in here, which ran 27 weeks, which was very long. Normally, when you run long on the downside, it means that there's a lot of selling that's coming in the market, and that was a 10.8% decline. And it's true, the sellers did come in. You had a slight uptick in momentum in this period right over here. This is the rising phase of the dominant cycle and the rising phase of the minor cycle. You can see what happened here when you got both of them moving up together. You exploded to the upside. When you had a minor cycle decline, because of the upward force from the dominant pattern, you only get a small decline and then you move up again. Here, what's going on is that this rally failed right over here at the 78.6%, a little bit higher, almost a double top, and then rolled over. And once it gets under the 78.6%, in other words, the distance from here to here, it's now given up about 85%. Once that happens, it sets up a lot of risk. Once it gets underneath the cycle low right over here, which is at 319.80, it is a breakdown and declares a major top. So it's very close to that right now as we have this extreme weakness going on in the market. And now when I look at this, you can see the head and shoulders top. And that measures down to 290 basically right out over here. So this is 290 here. This is about 295 right there at the time frame of this minor cycle bottom. So with the cycle breaking down, momentum turning negative again, the head and shoulders completed and turning down. And if you go take our cycle analysis workshop, you'll learn how cycle patterns create all of the chart patterns that you look at. It's just phenomenal information to have. So right now we're in a very, very negative condition, and the breakdown is underneath 319.80 will be a dire condition. The probabilities of a sharp decline will be very, very high. And you can see our projection starting to form in there. Now I have two scenarios in here. Both are bearish. One is less bearish than the other. The scenarios are really based on the fact that what the market looks like in here is, it's, in my opinion, discounting the scenario that puts the most risk in the market, which is the Biden win. Let's first look at the potential for Trump holding on to the presidency, which, based on the polls, is a low percentage. If that were to happen, then the market would turn up. There would be a relief rally of very, very significant amount. I would doubt that it would get above this level, 354. If it did, it would really repair the market, but I really doubt about that. And that would then give you a scenario where once this cycle rolled over again, you will break under here. You'll probably get down to about the 38.2%, somewhere around 310. That, with the head and shoulders measurement coming up, you'd get pretty close to making that measurement right over there. I would guess that the target for the downside for this area over here is about 305. It might do a little worse out over here into March in this next cycle right over here. Under the conditions of a Biden win, I think that the risk is very large. I think a decline into year-end is will be pretty high probability, as investors want to sell now, getting ahead of the big boost coming in capital gains. There are a lot of other big boosts in taxes that we could talk about that are likely, and it's been no secret. I'm not making a judgment. I'm just telling you what Biden said, and that, in my opinion, especially under the consideration of capital gains, would bring a lot of selling. My opinion is that this minor cycle here, you would see this head and shoulders top satisfied in the minor cycle, with the decline down to about 288 would be the target right over here, and a potential even to get down over here around 273 if that happened. Under the Biden win, we would expect again out over here into this December period, early January, to get a rebound similar to the pattern that we see here under the Trump scenario, but then not getting as high, rebounding from a lower level, and then the risks out over here far more significant, potentially getting down as low as this area right over here, which is 272 or so, and this being about 250 out over here into the March time frame. So under the scenario of Trump holding the presidency, which I think is the lower odds, you get a relief rally somewhere up here and then another decline. Under the condition of a Trump win, of a Biden win, I think you get a much sharper decline immediately. People really trying to get out of their longer term holdings before the capital gains tax goes up and before we run into all of Biden's policies, and then some relief rally out over here, and then a much bigger decline out into late winter and early spring for the stock market. Again, I'm not bringing you political opinions here. I'm simply bringing you some of the evidence, in my opinion, about the policies that are coming up and the patterns that the stock market has brought to us to analyze, which right now are quite negative. I want to say that the NASDAQ, the Russell, They are not quite as deep as the decline right over here. The patterns are not quite as negative as we see in the broader market here for the spiders, but they are still showing a very, very similar toppy pattern. And again, the likelihood of declines coming out in through the winter time for the stock market. This is, of course, quite a negative scenario, and I have warned about the potential for this for the last couple of weeks, and the top is just really forming. And if you want to be a seller, I think that there's still time. If you want to be a buyer, you can see in here that I think that there'll be a better opportunity for that based on what I think is the highest probability scenarios based on what I'm looking here in the stock market. That is a look at the stock market, and I think some very, very clear patterns that we're looking at, and hopefully it was educational to you and helps with your decision making moving forward. MarketWeek election special, stock market 1 to 3 month outlook.